Hello, I'm Tim Beggins, president of Elk Trading Company. In the midweek natural gas report, natural gas prices are actually higher. Currently, right now, for the spot January contract, we're currently trading at 4.5970, up 2.3 cents or a little bit of 0.5%. And as you can see, the RSI is starting to go sideways. It's looking for some direction. We do have the storage report coming out tomorrow. NGI, Natural Gas Intelligence, is expecting a minus 163. That compares to a minus 167 last year, but above the 5-year average, which is around 89 BCF. So again, we're looking at slightly higher prices this morning after a falling dagger market for the last 2 sessions. And here's the hourly chart. The RSI is turning higher, and we are currently sitting just below that pivot for today at 466.80. We're holding at first support at 445.70. We came in right there at the low. So far in this session has been 445.5. So right there at that first support level, we'll look to see if we can gain any momentum to get up to 478.40, which would be first resistance. But we need some changes in the weather forecast models. Again, the European model, blowtorch, warm after this weekend's cold in the Northeast. And the GFS is completely disagreeing again with those European model runs. So let's take a look at what else may have caused our fall off here. And we always do a post-mortem to find out what happens with our bullish outlook. Well, here it is, potentially one of the signals, the April through October strip here. This is for 2026. And look what happened on Friday. It hit that previous high here, which was at 4307, got it as high as 431.60, as you can see here on tradingview.com, but the RSI is trying to base out and see if it can start to stabilize and put again that longer term up channel here as we start to base potentially for some more cold weather, as winter has yet to officially start. That's December 21st. So let's see what happens here with winter. It looks like we're just not over it yet, but let's see if the cold shows back up. And what else was happening? Well, that TTF, right? The tidal transfer facility. This is the tidal transfer facility versus the Henry Hub. And as you can see, we hit a low at 407.70 on Friday. We've since bounced a little bit, but that $4 level is kind of critical for whether or not cargo should be moving from the United States over to Europe, which remains fairly warm. We'll see in the forecast here. And yet, storage. The EU as a whole, this is 71.8% full, with Germany at 64.4% full. This is well below the 5-year average, but they don't seem to be in a rush to refill storage anytime soon because it's warm. And here, speaking of the warmth in the US, the 8 to 14-day temperature outlook is below normal for New England, below normal for the Great Lakes, near normal for the mid-Atlantic states, and everywhere else is normal to above normal, especially out west. And let's turn to the GFS model. This is for the wind chill factor, which I think is a little bit more of importance here than just the HDDs. And as you can see here, it looks like we're going to get some colder weather, obviously through Chicago here at wind chills for the 26th. This is December 26th, down to 17 degrees. But let's compare it to today. It's pretty much the same. But as you get into the mid part of the month, as you can see, it's a strong southern ridge, which keeps that cold locked up into Canada. This is the GFS model. But as we turn to the European model, it's even worse. As you can see, as we get through toward the 25th, it's still warm across the southern tier of the country. So let's turn to Europe. Well, it's warm right now and stays that way all the way through. Really, the cold is stuck in Russia. And as you can see, this is taking us all the way through December 24th. How about Asia? Well, it's cooler in parts of Japan and the Koreas, but as you can see, that's really the only area as we go through the forecast. Maybe some cooler weather in the eastern provinces here as we get toward December 13th. But unfortunately, no major outbreak of cold. It remains locked in Siberia. As you can see, it's all the way over here out in Siberia and parts of yeah, just Siberia, I should just say. It's a broad area. And as you can see, maybe toward the end of the month, toward the 24th, we start seeing a little bit more cold. Let's turn to the Arctic. We've got a heavy snow and ice cover across right now, the Siberian and of course Canada and Alaska. The Bering Straits have iced over and the Hudson Bay continues to form ice. Maybe another couple weeks here, maybe toward the first day of winter around the 21st, we may see that northern approach finally close over. That body of water will then close up with ice and that'll allow cold Arctic air to descend directly into the Northeast. And as you can see here from the nuclear fleet, we're at a 5-year low on outages. We've only got one nuclear plant, Palisades, up in Michigan, that is totally out. Surrey out in Virginia is down to 50%, but the rest, there's only 4 that are less than 6% out. The fleet is ready, and we're currently only 1.9 gigawatts out on US nuclear power plants. And let's turn to the oil and gas E&P sector. These are stocks between $2 and $10 billion and have a high short float, over 10%. And Civitas, CIVI, has fallen off the list. Why? Perhaps the hedge funds are figuring out that the energy markets are going to start getting more volatile and they have a low exposure right now relative to the rest of the S&P 500. So watch these names. If gold shows back up, CRK and CNX should do well. If the oil markets start to finally stabilize, we'll see the rest of that board. So again, recapping right now for the spot January contract here on barchart.com, we're currently trading at 460 and 7 ticks, up 3.3 cents or 0.72%. Let us know your thoughts in the comment section below. Please hit that like and subscribe button. Thanks for listening. We'll see you soon.